Hello, good evening, and welcome to Weekend Investing Daily Bytes. Today is 3rd of September. We are shooting episode number 86. And like we do on every Friday, we do a Ask Weekend Investing round. So we put up a hashtag Ask Weekend Investing on Twitter every Friday morning. And the questions that we receive there are the ones that get answered here. So we've done 8 rounds of this so far, and all these rounds and about 20-25 questions on each round are available in the hub as a repository of questions answered. So there are some repeat questions, but we try to take up unique questions on each week, and our attempt is to achieve a point where each of our users does not really have any query regarding the process or regarding the the app or the rebalance or whatever is the procedure. Let there be no loose ends in terms of your understanding of what we are doing here. Let's first look at the markets and then we'll go on to the topic today. So the Nifty was a bit in a range today, but it ended higher. So it has been in a major run since last Monday, post the Fed meet, and we saw that energy stocks, commodity stocks, public sector enterprise, infra stocks, metals made a comeback today. Autos were up. IT stocks were also doing all right. So FMCG, pharma, and some banks were a bit soft, but other than that, I think most of the market was towards the greener side. Banks overall were not so buoyant, and small and mid caps also were taking some sort of a break from the push that we've had in the many days before this. In terms of the weekend investing small cases, ATH2 was a big gainer at 1.5%, then MI 35 was up at 1%, and others were up between 0.5% and 1%. In terms of the indices, Nifty ended, in fact, all of them were near about 0.5% up. The week that has gone by has done well. About each index has been up about 5%. And in terms of weekend investing portfolios, NNF10 has stood out with 7.3% gain this week and 13.5% in the last month. So it has covered back from its lagging position at the start of the quarter and is now up 31% for the current financial year. So NNF10 and LT Senex 200 both only large cap stocks. LT Senex 200 has some top mid caps also, because large caps is defined only till 100 and the next 150 are mid caps. So large and mid here, and only large caps 51 to 100 market cap here in NNF10 has done very well in the current financial year relative to the market on the large caps. So let's move to today's topic, which is the weekend investing round number 9, Ask Weekend Investing. And we've done 173 queries before this, and this is the next one. So Mr. Falcon Singh is asking, can we ask Smallcase to keep an option during SIP to allocate funds to top stocks only? With this option losers won't be allocated. So as I've done a DB just 2 days back on this issue, Smallcase SIP has a different logic, and it invests in those stocks which are losing weights versus the model first. I doubt if we can convince Smallcase to have another SIP algorithm purely for us. So what you can do is not do SIP in the conventional form, but you accumulate your SIP and do invest more once you can do the entire minimum market lot. Or if you can't do that, then you do a manage order and add manually to the stocks which have done the best, in case you want to do that. So the SIP will not have that automatic allocation, but you can use the manage capability to add manually to the stocks which have, the weights have increased maybe. So that is one way of doing this. Or you accumulate money and you allocate the entire to the minimum lot through invest more option. Next question is from Mr. Ajay. I wish I can share with you I wish you can share with us like a tool or best way to get alerted or track peaks and drawdown, so that we can do best judgment when to add more. So this we definitely cannot do, because peaks and troughs are found in hindsight. So today market is at a peak, reference to what has happened till today. 10 days later we may say that today 10 days earlier Nifty had peaked at that point, but tomorrow I will not be able to say whether yesterday was a peak or not, right? So this is a very it is next to an impossible task to do. What you can do is you can use certain indicators like a moving average or something like that, where when it crosses below that, you can consider that a intermediate peak has happened, or if it crosses above that, you can consider but that is very individual and it will have to be done by yourself. Also, since our license is only for our research products, we cannot offer you any customized advice on top of that. So I'm limited on that front as well. Next question is from Akarsh. Happy Friday to you. Given the challenges of 80% margin during rebalances, do you have any advice to park X% of small case as buffer funds? So we've always been saying this, that 5 to 10% of your capital, if you can park in, let's say, Nifty Bs, Gold Bs, Liquid Bs, or just keep in cash, that should be enough for most portfolios for your rebalancing. And a lot of people also do not keep any additional cash, but just allocate 80% on that day and come back and do 20% on the next day. So both these ways are, I would say, good enough. Next question is from Mr. Preetham Das. You're doing a great job. Thank you so much. Can you make a tool in Google Sheet or something where if users put the SIP amount for a particular product, it will show which stock it should allocate to your algo rather than the small case algo? So I think I've answered this in the first question 174. And because we have, there is no way to secure Google Sheets for particular portfolio. Two, there is no way to sort of not do this and not be seen as being advising additionally. And also this is for advanced users who want to improve the results from the existing one. So I think my suggestion would be go with the two suggestions, that either you accumulate money and put in one go using invest more, or you do manage function and selectively add to the stocks in case you want to add to the ones which are gaining ground. Next question is from Mr. Hariom. After a week of market uptrend, ATH2 is still down. Will it go up slow as compared to MI20? So I don't know how one strategy will perform versus another, especially in a very short term. I mean, these are all long-term strategies. There will be bouts of underperformance. There will be bouts of outperformance. Only after a significant period can we really say that, the strategy has not performed or strategy has outperformed. So, a week of market trend, and that too for large cap stocks, and your strategy may not have all large caps. So I think that comparison, I would want all users to get out of this, short term focus on each short-term move, on each stock-specific move, because the strategies are not meant to function that way. So please see after a considerable period whether you want to re-evaluate your exposure to a particular strategy or not. How has the comparable universe done over 6 months, 1 year? So I think in weeks it is very, very difficult to say what happens. Like I can take the example of NNF10. It was doing really badly in the first month of this current quarter, and it has come back and beaten all the other strategies in the third month or the second month. Sorry. So it's very difficult to pinpoint on a very short term basis what's going to happen. Mr. Patra has the next question. As you are saying to rebalance without modifications each month or so, could it be implemented from Smallcase that the rebalance could not be modified, a force rebalance from Smallcase publisher? So I know that Smallcase is working on a new logic where these changes of incremental quantities will not be required largely. So about 90% of them will get eliminated, and that may happen as soon as the next quarter. So I would say wait on this and only do incremental changes for weekly strategies. Number one, don't do it for monthly strategies. And for weekly strategies also, once in a month or once in 6 weeks, just do the entire rebalance so that your portfolio comes very close to the model. We are doing this incremental changes only to reduce the DP charges on a weekly basis. So, you can do on 3 weeks, you can eliminate the incremental changes, and on the 4th week, you can just do the whole rebalance without tweaking anything so that you are in sync with the model portfolio. Next question is from Teja. I have watched one of your videos from 2019 in which you talked about service assurance. I checked on the website and see that it's suspended from September 30th. So the reason why it has been suspended is that the regulator came out with new rules for RIAs from 1st October 2020, in which any service assurance plan was not allowed to be continued, and hence we complied and we suspended that program. Mr. Ketan is asking, we have been discussing slippages for a long time. Just an idea if we can update rebalance post 9:15 am, similar to your shares program, and we can get an update say at 10 am or so, piracy issues could be resolved that way. So one constraint that I have is that Smallcase procedure is not in my control. If Smallcase has a process that runs at the rebalance process that runs at pre-market, I cannot change that time. Two, if everybody gets the rebalance at 10 am, then the same thing may happen at 10 am instead of 9:15. So how does it benefit anybody? Three is that we are requesting everybody who has a portfolio larger than the recommended portfolio to seek other strategies. Go to PMS, go to AIF for those larger investors who have put in crores of rupees. The third way is that we are working with Smallcase to bring out a tool where you will be able to do a backtest that if I did all my rebalances on Tuesday at 3 p.m. or next Friday at 10 a.m. or next Wednesday at 2 p.m., what would have been my result versus what I got. So that way the rebalancing can be spread out, because it is not that Monday 9:15 you have to do it, but because people want to do it first before others, it causes this especially in small cap oriented strategies a slippage. In large cap strategies like NNF10, LTCNX 200, even in MI30, MI50, MI25, there is hardly any slippage. But because in few strategies where people have put in more money that we have recommended and a lot of people have come in, we've also stopped the subscription there. So gradually people are moving out. Gradually the subscriptions are getting over and some people will not renew for whatever reasons. So, these will come in control over time as well. So there are many measures that are coming in place. So I will not worry too much about these slippages, etc. for the future, and think longer term. And in more mid and small cap oriented strategies, obviously the model portfolio is something that you want to get to. But even if you don't get there, even then the returns are really, commendable, I would say. In larger cap universe, there is no slippage between, or in the live strategies, there is hardly any slippage. So there are various pockets that you can move to in case slippage is bothering you. But yes, we are taking all measures possible to reduce this and eliminate it. Next question is from Kalpa. Is it better to do SIP every month or minimum investment periodically whenever we have the fund? So my preference is for minimum investment because it invests in the same proportion as the existing weightages. But you can do SIP every month also, not really an issue. Next question is from Shriram. Are there any tools or processes apart from XIRR to keep track of the buy sell of stocks as part of Smallcase? Right now I'm doing it manually in Excel sheet. Tools or processes apart from XIRR to keep track of the buy sell of stocks. So if you download a transaction statement from your broker, you will get all the buy sells of all the stock, of all the transactions that you're making. So I think that should give you the required data that you may be looking at. Next question is from Pranay. Is there a conscious effort by stock picking system to avoid high overlaps among the different weekend investing products? I feel distribution of high momentum stocks in each of the schemes could result in reduced returns of the individual strategy. So there is no conscious effort of picking stocks in this. But yes, if we have a stock which is in the high AUM category, then we will not try to put that stock in the, we'll try to see if there's an alternate available to reduce slippages. So there is no conscious effort in terms of stock picking as such, but equivalent stocks of equivalent, nature of the pick will get chosen there. Sheshu is saying, do you think it makes sense to post actual performance of Smallcase and backtested results slightly different? Color may be in daily bytes or reports. Backtest could have some inherent biases. So yes, I agree with you that backtests should be taken with some pinch of salt, although backtests are not done with any bias. But yes, backtests come from a different era of the market and may or may not replicate. So let me just show you on the hub what we have done. So if you go to the hub and you go to the tab monthly returns, for instance, so we have tabulated all the data for all the segments, large cap and mid cap, for instance. So these are the indices and these are the weekend strategies. So you can see that the backtest portions are in black and the real runs are in blue. And similar for all strategies. So you can see, for instance, this is all cap strategy. So ATH2 started on Smallcase August 21, so it's blue here. But ATH started from April 2019, and so it's blue here. So you can see that we have segregated the data from backtest to from where we started on. MI25, MI30 and MI50 are three strategies which were running in live mode also before Smallcase. So in those strategies, the data will be blue from April 2016 onwards. MI35, however, has been started recently, so it is here from August only. So this is currently monthly returns. We are adding more tabs for quarterly and yearly in the same format here also, so that you can just very quickly compare against the benchmark and against the other strategies in the same genre, so as to say, and compare the returns on a monthly, quarterly and annual basis. So let's go back to our presentation. Next question is from Ramesh. Your thoughts on factor-based small cases like low volatility, etc. So factor-based investing is very successful, and different factors are used by different portfolios. I have not been able to see too much of advantage of low volatility yet. Although there are a lot of low volatility products, and some of our actual products have been labeled as low volatility by Smallcase algorithm. So and that algorithm works in this way that it takes your actual trades of the last year or two or whatever period it has been on, and it compares to the average volatility in the market for the stocks, and it labels for low volatility or high volatility. So several of our products are actually low volatility products without them being a factor of of volatility oriented products. So I think the second question is there. So right now I have no plans to launch on a volatility factor, but yes, on a market cap basis, I would like to do more of large cap products in the coming time. Sarvagya is asking, I sometimes wonder why don't Baj Twins make into your momentum products portfolios? Is it because of large per unit price? So that is one reason, and also just that there are 2,500 stocks in the universe, and we have only few hundred seats to fill. It may just be a matter of chance that and I think in one of our strategies we did have Bajaj Holding at times, and Bajaj Finance also was in one of our products, but I think much before we went on Smallcase. So I mean there is no limiting of any stock to come in. But the second point that you've made about the larger per price unit, yes, some strategies will not have any stock which is more than, let's say, 5,000 rupees or so, something like that. So yes, that is a limitation that will come through. Nabil is asking, this is for ATH. I have observed a couple of times that a stock is up 100%, but by the time it gets exited, the gains are reduced to mere 60-65%. Would it be better if you exited when it drops to around 80% gains? So the exit strategy on ATH or on any other portfolio is not based on percentage gain. While it is very ideal that we get out early, but that increases the churn in a strategy also. So you need to give it time. For many stocks may come, and while we may be focused on few cases where they did go plus 100 and exited at 60-65, but there may have been plenty of cases where it went to 100, went to 70, and then went to 200, right? So you don't want to miss out on those cases as well. So it's a chicken and egg problem. If you tighten the band too much, you'll get a lot of churn. You'll definitely have lesser of give ups, but you loosen the band, you'll have low churn, but you'll have more potential of stocks gaining again. So it is a matter of choice, and the strategy is designed in which way, and I'm not too unhappy with the results that we've had, so I'm not changing anything there. Vinod is asking, could you please share best practices on when to perform the rebalance to minimize slippage? If there's any tool to show us the impact. So as I said in the previous some question before, that a tool is coming in the next month or so, where you will be able to see what is the impact of slippages at various points of rebalance. And my suggestion is that you can take a view at the time of rebalance, is that has the market moved too much or is it just a mere percent or two? If it has moved too much, you could wait. You could even wait for a day or two. But once we have that tool, I'll be able to put some data in front of you that, even if you did rebalances on Wednesday, it has not impacted in the long term. So please wait for some more time on that. The next question is from Mohit. Where can we find the 200 DMA tool to plot it with weekend investing product charts? Which software do you use? So I think we have something on the hub for this. Let me just go and see. Let's go to the library. So this library tab on the hub, please use it extensively. It has amazing amount of resources here. And let me just see if I can find so this is number 27 in the support content, EMA tool to manage small cases for active users. So please go to this link and you will find that tool that we had showcased in our daily byte. And please go through so many, knowledge bases that we are creating here. This is really, really very, very good. And I invite even non-weekend investing small case users to come here and make use of this hard work that my team is putting in. And really this is, you will not find this on Smallcase website also. So our intention is to provide you with small case support, which is better than small case support. So apologies to small case for this, but we want to achieve that. And so please make use of all this resource, and this will fulfill all your queries. Next question is from Dr. Achal. I've been investing in Nifty Next 50 mutual fund. I'm planning to invest in Nifty Next 50 strategy and stopping my mutual fund investment. Would it be prudent to do so, as they have some kind of overlap? So whether it is prudent or not is your call. I cannot say that, but what you can do is you can remove partly and start off here, see the performance. If you are happy, move more and then move more. So you can do it in parts if you don't want to do one shot, if you're not sure about how NNF10 may perform. So, and in every other strategy also, I say, always move in parts. If you're moving from PMS, if you're moving from mutual funds, if you're moving from a direct equity, don't jump in one go, because it takes time to gain confidence on a strategy, on an advisor, on what you're doing. And, by jumping in, it will make you more edgy if in case things don't go immediately right for you. Next question is from Bhavesh. I'm using ALLCAP and MI25 from March 21 and adding on monthly basis and seeing stocks moving up and finally exiting, seeing all or most gains going. Can we have better exit or partial booking in our strategy? So again, I would say we are not trying to re-engineer the strategies here just because of 3 or 4 months of experience of some stocks not keeping the gains that. So again, the idea is not to look at individual stocks, not to look at short-term movements. Please look at it as a long-term vehicle. If you are not satisfied with long-term returns, then of course, one should not be a weekend investor. But I doubt if you should be questioning the strategies, given the kind of performance that the strategies have given. Next question is from Shravan. Is there a way to track own index of the small case that we are invested? The graph that small case originally shows is based on the publisher, but with tracking error in my own SIP, etc., I would like to see a graph. So I'm not sure if the app has this, but it should have an equity curve. If it doesn't have, I'll send the suggestion to small case. Also, you could create a Excel sheet, a Google sheet where you can update your index daily on a daily basis and create your own chart. That you can do like we do for all the index strategy, all the strategies. We take the index every day and we plot it in our database. So you could do that the same, and we can take it up on a daily Byte also and provide you with a sheet which already has this built in, and you only have to plug in the daily number. So I'll ask my team to prepare this, but I will also inform Smallcase in case this is not available. Jinga is asking, some of the large cap stocks are making all-time highs. Will those stocks be included in the ATH2 strategy for safety, or will it give more preference? So there is no preference as such. Recently, like in the last few balances, you would have seen that large cap stocks have automatically started coming in. Earlier, the flavor in the last month or two in ATH2, even before the launch, was in small and micro caps sort of stocks, but it is gradually changing and it is moving into larger caps, and automatically that change is happening. So all the strategies across the board are self-correcting in nature. So we don't have to put any bias of ours about whether we should put large cap, whether we should put small caps, and hence it is self-correcting in that nature. Next question is from Deepak. These days slippages are increasing. In this Monday's rebalance in ATH, one share gapped down 10% and orders for rebalance got executed, and subsequently it covered up. Any way to avoid it? So number one is, our buying or selling is not the only buying or selling that is happening in the market. It may be that that stock breached some important technical level and there was a lot of selling that happened from other sources, or that some event happened in that stock that morning. So in case you are finding that a stock has moved a lot, you can wait for some time. You need not rebalance blindly. You need not just put market orders without looking at the rates, or you can do it in a day or two later. And I said in the previous questions, we will come out with a tool where you will be able to see if you were to rebalance at the end of the day, what would have been the impact, etc., etc. So a lot of times stocks will move very early in the morning because there is low liquidity in the market at that time. So you want to maybe wait for some time whenever stocks have moved too much immediately, and or you take a longer term view and say that I may be a bit off from the model, but I'm still happy with what returns I'm getting. The stocks are moving a lot and give or take 5% here or there, and once in a while, yes, some stocks will move like this crazily, and it may happen the other way also. We may suggest a buy on some stock and it may open circuit down. I mean, that may also happen once in a blue moon. So I would not give too much of color to one stock which may have moved 10% in a very short span. But yes, please be careful when you're doing a rebalance. Next question is from Mr. Bhavesh again. This question has been repeated. Next question is from Darshan. What do we need to check before rebalancing ATH2? Do we need to see loss, market trends that day, or take a decision to rebalance the same day or later? So I think, as I said in the previous question, please be mindful of where the stocks are when you are rebalancing. If you find that the market has moved a lot in the rebalance that you're trying to do, you can wait, or you can use the tool that will be coming out soon to figure out what may be the rebalance if you do it a day later, or 2 days later, or 3 days later, and take a decision accordingly. Also, if slippage is becoming an issue, please move to larger cap strategies where there is no issue of slippage. Please don't get bothered with slippage if it is bothering you, because slippages will happen in more strategies which are smaller cap oriented, or where a lot of people have suddenly moved in. But in many large cap strategies, NNF10, LTCNX 200, MI30, MI50, there are no slippages. Even in MI50 is large cap and mid cap, there are no slippages. The MI30 is large cap and mid cap, there are no slippages. So the slippages mostly happen with smaller market cap stocks, and over time in strategies where there are slippages today, they will self-correct as people will move out, and we are not putting in new subscriptions to that, and the capital may distribute, and Very soon we will come out with a self-regulation that if you are going across much beyond the recommendation level, we will not allow you to resubscribe. So, all those people who have put in crores of rupees in the recommended 10-15 lakh type of strategies will not be able to renew. So, this will automatically resolve once that happens. Anukul says, I started ATH2, invested minimum amount around 23,000 as it is a low amount strategy start. What would be the best way to increase my investment to lower my expense ratio? What could be the possible SIP amount? So, again, I cannot suggest you what you should be the SIP amount. That your financial advisor should be telling you what is the ideal SIP amount for you. What I can say is that ATH2 is not a low risk or a core strategy. It is a higher risk momentum strategy built to add alpha to your basic core. So I would not invest too much money out of your entire basket into that. And also I would want to build it up to at least 2 lakhs at least in the first year, so that my expense ratio stays in some control. Otherwise it will become very, very high expense ratio for you. Pranay is asking, ALLCAP currently has 17% allocation to large caps, 55% to small caps. With large caps seeing a rally, will ALLCAP be rebalanced to replace small caps with large caps? No, so we will not be doing a biased reallocation. As and when there is a seat available on the ALLCAP bus for a new stock to come in, at that point of time, the leaders, if they are ALLCAP, if they are large caps, they will automatically come in. So we don't do a manual biased reallocation on this. Dada Sona is asking, will the movement of investor capital towards large cap affect ALLCAP and ATH2 subscribers? No, why should it affect? No, there is no impact like this that I foresee. Amit is asking, how does Mi MT Allcap plan to grow during a bear cycle? Because from November 18 to December 19, during the small mid cap bear cycle, it generated only 3% return. Will it perform similarly if a bear cycle starts tomorrow? So if in a bear cycle a strategy is generating 3% return, what is wrong in that? I mean, if broader market is down 20% and your strategy generates 3%, I am the most happiest person. So I think if in a bear cycle my strategies are in the green, I'll be the happiest person. I don't know if you are expecting 30% gains in a bear cycle out of a strategy. I think the expectations are extremely optimistic, I would say. So please be realistic that in a bear market, every strategy, long only strategy, will lose money. The least money lost is the gain during that period. If you don't lose too much money, if you lose lesser than what the market has lost, that itself is a gain. And if a strategy has performed in a positive, that is a huge gain. Next question is from Nobal. What is the look back period for momentum calculation in ATH2? Does it also factor in the volume data? So Nobal, we don't discuss the strategy details. Those are proprietary in nature. So sorry, I cannot give you any more color on that. Pugarino is asking, among the ATH's new ATH2 seems to be the new darling in terms of profits. Would you say this is because of constituent selection for Smallcase or because ATH has had leakages over time? So I don't know about darling or not. Both are very dear to me. I hope both will keep doing well. And I really don't know what the real question here was. Bhavesh is asking, as per your tweets, ideal investment horizon should be long term, 4 to 7 years. Why isn't weekend investing small cases don't provide the option for long term fee? So I think if all retail investors get together and petition to SEBI to allow me to take long term fees, I'll be most happy to do that. Aniket is asking, waiting for the global strategy US stocks. Please give some idea when will you launch it. So Aniket, I don't have a timeline to offer you right now, but I would say that we are definitely going to look at this very soon. Atharva is asking, I would like to say thank you for all your daily bytes. Thank you. My query is that if we get good, bad, ugly report on every Friday before 3 p.m., so if there is no rebalance to our portfolio, we can invest more on Friday itself. So this is not possible since the portfolios get rebalanced after market close, and only by late evening are we able to formulate the good, bad and ugly report. The rebalances are not as many that will really make a material difference even if you did them on Friday. With one or two changes here or there, you could rebalance on Friday itself and then make the change on Monday if you like, or you can do it on Monday itself. Mr. Ganesh is asking, kindly guide how to read your good, bad, ugly report as a subscriber and what inputs I have to take from that report other than the rebalance. So I am a bit stumped because I thought the good, bad and ugly report is very, very simple and straightforward. But I will try to do a daily byte on this now that you've asked as to how and what one should get out of it. So basically, besides the rebalance, the good, bad and ugly is a summary report of the week. What happened during the week for each strategy, what is the result so far in the last month, last financial, CAGRs, drawdowns, the important videos that we have released this week, important testimonials that we've got this week. There is so much of data in that one report, and I doubt if anybody else in the market provides this kind of a comprehensive report every week. So my team really puts in a lot of effort for this report, and I hope that all of you are reading this report. But yes, we will do a daily byte on this and offer you what all you can read from it. So this is the end of the current round of Ask Weekend Investing. Thank you so much. It was a long one, 42 minutes. Wow. And thank you so much for listening and being a weekend investor. And I'll see you in another video. Bye.